please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. The markets are doing just okay, 18 or 19 odd points higher. And we've got about 50 odd points on the Sensex as things stand right now. And well, there is no surprise and prizes for guessing which is the top performing index. It is the pharmaceutical index, which is up another 2%. I mean, on the trot 2% every day for the last, 8 trading sessions. I mean, actually not exactly 2% every day, but on an average 2% because the index itself is up some 16%. That is 1/6 over the last 8 trading sessions. And it's kind of sort of brought on all kinds of people who've joined the chorus in a way of saying that maybe this is the sector to look at, especially in a defensive kind of environment that 2018 is expected to be. I mean, when you look at everything together. Is there a number 2 sector today in terms of trading? It's IT. But I mean, you know, it's half the gains which the pharma index is trading with. The IT index is up just about 1%. And then it kind of sort of falls off, nothing else. Then you've got real estate at number 3, which is barely a 0.25% higher. So it's basically IT and pharma. It's, of course, and those two bring to mind, I mean, the term defensive more than anything else. Overnight Qs were nothing to talk about at all, except, of course, the big sell-off that we saw in the euro. And that came through after the ECB did what's been described as a dovish kind of taper. They said the first rate hike is well, it'll have to wait till, I mean, the summer of 2019 probably is over. So we've got many more months before we get to that eventuality. But stock-wise, overnight markets, not very much to offer. Ekta, morning.
Hi, Prashant. Absolutely. I think for the pharmaceutical stocks, it's really, you know, Sun Pharma's Halol plant triggering off the rally that we can see because the guidance, for example, for Lupin hasn't changed overnight for the US markets. FY19 is still going to be challenging for them, but maybe, just maybe the street is hoping that the remediation for 2 of their facilities will probably be faster than anticipated. So maybe there's optimism as a whole which is coming for the pharmaceutical index. But as of now, yes, like Prashant pointed out, it's really the sector of the week. It's been the sector for the past 2 weeks, in fact, and for today. But let's get in some strategies then. We have F&O strategies or lined up with... Yeah, we have F&O strategies lined up with Krish Subramanyam of Altamount Capital. Krish, hi, morning, over to you. What's your call both for the Nifty as well as specific stocks?
Yeah, morning, Ekta. I think the last couple of weeks, the story has been the same. I think we are stuck in some sort of a range. So the strategy remains the same. Only the strikes have changed this time around. So we are recommending selling of a 10,700 strike put and a 10,900 strike call. And each of the legs fetches about 50 bips premium. So about net inflow comes to about 100. So one could possibly expect this time value shrinkage to continue and keep a target of 30. And maybe one could keep a stop loss of 115. Stock specific, as we were just discussing, I think the pharma has been the limelight. So I'm going with Dr. Reddy, which seems to be hogging the limelight today. And we could probably do a bull spread considering the fact that we have already seen a decent rise. So bull spread might be more of a risk in terms of a risk reward might be more friendly. So one could buy a 2350 strike call and sell a 2500 strike call. So the net cost comes to about 50. The maximum one could get is 100 rupees and one could keep a stop loss of 25. The last one is covered call in SBI. Now the PSU banking pack, I think this is segment I think could see some gains coming about closer to expiry. I think we have seen some frenetic buying coming about, particularly likes of XBI, even in likes of PNB. But going with an SBI, so covered call is what I'm recommending. One could buy the futures and also sell a 285 strike call that's quoting at around 5, keeping a modest target of 288, and maybe one could keep a stop loss of 274.
Okay, Krish, thanks very much. Appreciate you joining in with those trading strategies. Mitesh is also with us on the top of the show with what he's making of things and his trades. Mitesh, morning.
Yeah. Good morning, Prashant. I think very clearly, you know, we are seeing some kind of follow through after the yesterday's decline. So the idea is that you keep yesterday's pivot on the Nifty as a trigger point if that breaks and go short. Otherwise, this is a market which will just remain in this range of 10,775 to roughly about 10,860. and maybe on the upper end of the range you can attempt a short. But having said that, a couple of pharma and IT names look good for a long side trade. So maybe if you were to look at shorting the index, you could go long on these stocks.
Okay. In terms of your picks, what would you recommend, Mitesh?
Yeah. So as I said, I think pharma still remains a sector which is clearly enjoying very strong momentum. I have identified Torrent Pharma, which has given a fresh breakout above this 1460-65 zone. So keep a stop below 1455 and look for targets close to about 1560. While SRF, after a big correction, is showing signs of reversal on the intraday charts. So that's a buy with a stop at 1896 for targets close to about 2000.
Mitesh, we'll speak with you soon again. Thanks very much for your trades, and we should actually put up Mitesh's picks at the bottom of the screen as well, and we'll do that in just a bit. On to some market opinion then. We have pessimism in the Indian market, which is overdone. That's the word actually coming in from Adrian Mowat. We, of course, spoke with him earlier today, and he says that one needs to look at stocks optimistically here in India. Listen in.
I think the pessimism around India is probably a little bit overdone now. Within the market, there's been a big dispersion in performance in India, with a few of the tech companies doing well, some of the consumer staples, the more defensive companies doing well, and cyclicals generally struggling. And perhaps that sort of pessimism starts to bring us into a bit of a buying opportunity in an economy that maybe is not as robust as it has been for the last couple of years, but is still a pretty strong growing economy. India's moving up the list. So I am reluctant to be buying into emerging market basket as a whole. I do think there's still a very wide range of fundamentals there. Now is the time to start to look at stocks on a slightly more optimistic basis. And remember, this is me really sort of changing my view. I've been pretty cautious throughout much of 2018. And I think now is the time to look into some of these more underperforming sectors, these more cyclical sectors, whether that's real estate or whether that's some other infrastructure plays, on a more optimistic basis than the market currently is.
Okay, so that's the word coming in from Adrian Mowat. But besides pharmaceuticals, there will be all eyes on TCS today. This is as the board will be considering details of their buyback. Remember, this is the second buyback from the company. Kritika Saxena joins in with details on what we should be watching out for. Kritika.
Two key points to watch out for from TCS. One is the buyback. We are expecting to see details with respect to the contours, timeline of the buyback. Remember, this is going to be the second buyback from TCS. Any kind of clarity on if promoters are participating will also be critical. But aside from that, the annual general meeting of the company will also be held, and we understand that there is expected to be some commentary with respect to the growth pipeline and what lies ahead in FY19. There has been the sense that FY19 is looking like a better year than FY18. Any kind of commentary on the order book, on the digital order book, on the deal pipeline that the company is looking at, any kind of forward-looking statements with respect to the acquisition plans, with respect to how many large deals are in the offing will be very important. There have been concerns with respect to visa issue, with respect to regulatory concerns. What shareholders need clarity on is essentially how the outlook will be, when exactly is there going to be a sustainable recovery as far as BFSI is concerned, and any kind of statements, forward-looking statements on that, anything concrete is going to be watched for very carefully.
All right, Kritika, thanks very much for that. We'll slip into a quick break, the first here on the show. We come back and we get you, as always, some commodity trading ideas. Sumit Bagadia of Choice Broking joins in with us. Back in 2.
Welcome back. Well, let's shift focus to the commodity space. We have Sumit Bagadia of Choice Broking, who joins in with some of his strategies. Sumit, hi. Thanks very much for joining in. So what exactly would you be recommending, if you could just list all of your calls for us?
Hi, good morning. Yes, absolutely. Well, we have a few commodity trading calls. There are 3 buy calls. One is from bullions, and that is gold. I think gold is looking strong on charts from here on. There is a possibility that we might see upside move in which we can see a move around 200 to 300 points from present levels. I think for a trading perspective, one can initiate long positions in gold August contract at the current market price. Or if there is a dip of around 40 to 50 points from present levels, then that should be used as a buying opportunity. Downside, one can maintain stop loss of around 31,250 levels for the upside target of 31,550 and 31,600 levels in next couple of days. The second pick for the day is from energy space, and that is crude oil. In last couple of days, what we have seen is that crude has given a good bounce back from lower levels. Looking at the chart, it seems that the same upside move can continue, and from here on we can see a move till 4640 levels. So for a trading perspective, one can initiate long positions in crude June contract at around 45.40 levels, which is the current market price, with a stop loss to be placed at 44.80 on lower side for the upside target of 46.10. And if 46.10 is taken away, then we can see extended move till 46.40 levels. And the third pick for the day is from base metal spec, and that is nickel. Nickel is looking very strong on charts. Looking at the chart, it seems that the upside move can continue, and from here on we can see a move till 1060, 1080 levels. For a trading perspective, one can initiate long positions in nickel June contract at around 1035 with a stop loss to be placed at 1020 levels on lower side for the upside target of 1060 levels.
Okay, gold, oil and nickel. Sumit, thank you very much. Appreciate you joining in with those strategies. We'll speak with you soon again. Well, back to stock markets and stocks in particular. Our special series, Hunting for Value, will focus on a company which has done about almost 40% this year so far. The analysts across the street are betting on the restructuring of the loss-making operations of this particular company. So is the street ignoring some of the coming improvement which may take place? Anisha is here with that stock and I mean just the 360-degree viewpoint on why there may be value in it. Anisha, over to you.
Well, yes, the stock that we are talking about is CG Power, and that's because the stock is trading close to its 2-year lows right now. Now, remember, the delay in resolution of loss-making international business and the lack of transparency really had the street worried. In fact, the gash became more profound after the Q4 numbers. As you can see on the chart, it was down about 25% after the Q4 numbers. So what really accelerated this down move? First up, the sale of the loss-making Hungary business, which has been the Achilles heel for the company, got further delayed to June. Now, remember, this business adds close to 100 crore losses per quarter, and hence we saw FY19 EPS being cut by analysts anywhere between 20 to 50% post the Q4 numbers. Now, resultantly, despite the price correction, the valuation multiple still remains a tad bit elevated. Now, to add to the nervousness, the company also reported some write-offs in the quarter gone by, totaling to around 400 crores. Now, what is actually spooking the street is the timing of this recognition, and this is raising eyebrows because the auditors of the company had suddenly resigned with immediate effect in April, and the Q4 audit was signed by interim auditors. Now let's analyze what can be the potential triggers for this particular stock. Now the Sanjeevani booty for the company, or the re-rating trigger as the analysts call it, can be the sale of the loss-making Hungary business. Now remember, the initial guidance was the sale in December, that got pushed to March, and now the guidance is around June, and it's only 15 days till the end of June, and we haven't heard really any update on that. So important to point out that. Other than that, the appointment of a Big Four auditor can also act as a potential re-rating trigger for the stock. Now remember, the company had earlier mentioned that due to some conditions precedent to a fundraising plan, they had to change their auditors, but the lack of appointment of the Big Four auditor has investors a tad bit nervous. Also, the clarity on the possibility of further write-offs will go a long way to build on the trust of the investors and improve the transparency. Now, the company is also taking a debt resolution plan which will help them to bring down the interest costs, and the overall financial performance of the industrial business is expected to improve, and that can be a potential trigger. Now, 5 out of 15 brokerages actually have a buy call on the stock, while only 4 recommend selling, and 6 of them advise you to actually continue holding the stock, given the fact that their consensus price is around 75 rupee per share. That leaves you with an upside of around 20 to 25%. Motilal Oswal, for example, had cut the estimates of FY19 EPS by a whopping 46% post Q4 and has a neutral rating, while Macquarie believes that the selling in the stock is overdone and the street is completely ignoring the improving fundamentals of the standalone business. Now, let's take a quick look at how the peers are also performing. Now, a quick look at the P metric will tell you that CG Power is still not, essentially very cheap and is trading at a premium versus to the peer at 19 times the FY19 earnings. Hence, while the analysts do believe in the turnaround story, and that could be a potential trigger, the investors are a tad bit nervous about the Hungary deal, and the fears are not completely unfounded, let me be honest, because given the past instances, we have seen the deal falling through. So that is perhaps something that is spooking the investors, but the analysts, they still remain positive. However, standard disclaimer, this analysis is not a recommendation at all. It is just a collection of facts. Back to you.
Absolutely. Thanks, Anisha, for that. So that is the hunting for value segment, highlighting CG Power. As of now, just want to point out that a lot of stocks from the broader markets, and I'm not only talking about pharmaceutical stocks, but healthcare stocks, which are gaining as well. So, for example, something like an Apollo Hospitals is seeing buying. That stock is up 4%. And even something like a Shalby is up and about in today's trade. That too is a hospital company. So, it gives you a sense that it's not just pharmaceuticals, but maybe there is some interest which is coming back into healthcare stocks as well. Need to take a break, but up next, Sanjeev Bajaj talks to CNBC TV18 about the Allianz partnership. We'll get you excerpts of that exclusive conversation once we're back.
Okay, 17, 18 points on the Nifty. There's not very much going on. I mean, it's been absolutely tepid, but higher. And I mean, I think before we took that break, Ekta did point out stocks in the pharmaceutical space, which were all sort of buzzing. And, you know, you put out a list of a screen of the top gainers across the board with volumes, and it'll be, I mean, every other name is a pharma name. Look at something like an Aarti Drugs. It's up some 14% or so, although very little exposure to the pharma market, to the US market, as Ekta was pointing out to me. But, well, 637, it's jumping up. That's the volume buzzers, actually.
43 times its 10-day average today.
that is serious increase in volumes compared to the average. Absolutely. The other pack actually, since Jayashree Tea came up, you could look at the tea stocks as well, because I did spot McLeod Russell some 4% higher. I did see Harrison's Malayalam, and there were a few others as well. So that's another, I mean, a small bunch, but I mean, it always does move as one stock or one pack. And you're seeing some activity there coming through as well. Okay, so that is what's going on. We will come back to some of these sectors in a bit, but some corporate opinion now. Allianz has decided to stay with its 26% stake in Bajaj Allianz Life and General Insurance companies. That's the word coming in from the chairman of Bajaj Allianz, Sanjeev Bajaj. However, in an exclusive conversation with Shireen Bhan from the sidelines of the EY World Entrepreneur of the Year Award, Sanjeev Bajaj said he doesn't rule out a future stake by Allianz in the insurance business. Here's an excerpt of the conversation.
What can we expect now, especially in terms of bancassurance, in terms of more partnerships? What's the future looking like?
Distribution is key to insurance, and we've been very careful over the last 5 years to see that we build up distribution across the main pillars. So across banker relationships, in the last 2 years now, between our life and non-life businesses, we've got Bandhan Bank, we've got Ujjivan, we've got India Post recently in the life business. We got Canara Bank for our non-life company 2 years ago. So we are focused on getting a set of new relationships, but one which is symbiotic. It cannot be one way where one is paying a lot of money for a relationship and you're not going to make money. That never makes sense. So banca clearly is important. In addition, for us, our biggest channel is still our agency. And we are working on a digital version of agency the last 2 years. So today, nearly 25% of our business from agency in our non-life business is end-to-end digital. It's a digital virtual agent, and we are replicating the same in our life business. And we are, in addition, working on a third pillar, which would be a proprietary sales force. This is something, again, that we are working initially with our life business, and as that works out, we will leverage it to our non-life business as well.
Speaking of future opportunities, Sanjeev, there's a lot of talk and conversation around what could potentially be a game-changing idea for the insurance business, specifically the health insurance business, as and when the government decides to roll out this mega health scheme. Is that an opportunity that you would consider, the standalone health insurance space at all?
It clearly could be one. Today we do write health insurance within our general insurance company, But for example, in the lending space, as home finance companies are a separate opportunity because it's a large enough opportunity that allows you to leverage volume, that allows you to focus. This could be something that is possible in the health insurance space for us. We are evaluating it.
By when do you expect to take a decision? What could be the potential triggers for being able to take this conversation forward beyond just discussion to actual execution?
Well, Shireen, right now it's at a discussion stage. We evaluate multiple opportunities every year. Many of them don't happen, but that doesn't mean the evaluation is unimportant. And health is at that stage right now. So there's nothing definite about this going ahead, but it is a very large opportunity in India, both in terms of what the government decides to do through the government scheme, but even on the private side. I mean, we are 1.3 billion people. The government scheme at best will take care of 30–40% of Indians. What about the rest? So that's why it's exciting for us to evaluate this, but there is nothing beyond that at this stage.
The decision that has been pending is on what Allianz intends to do with its stake, in the insurance ventures. Given the regulatory change that has happened now, has there been any future conversation, further conversation with them on what they intend to do, what you intend to do?
Yes, our conversation with Allianz has been very clear. They are not only very supportive of the Indian business, but they want to help it grow and go from strength to strength. So we have their full support doing this. At this stage, they are staying at 26% in our two insurance companies. And if they change their minds, they will get into a discussion with us. But we are working very closely together in continuing to build these two businesses.
Okay, so they retain 26%. They're not looking to hike that stake, which they are allowed to under the law.
They've decided that at this stage they will stay at 26. It doesn't mean that they will not want to take their stake up in the future, but where they were evaluating this over the last couple of years, they've decided, as far as we know, maybe a better answer would come if you were to check with them directly. But what they've told us is that they will stay at 26 right now, but significantly increase their support strategically to help these businesses grow. So that's a big positive for both companies.
Okay, so that is the word coming in from Sanjeev Bajaj. Just want to point out that for the Nifty currently, we're at 10,824. On a week-to-date basis, it's picked up around 0.5%. And if you compare us to what the MSCI Asia ex Japan has done, that's been an underperformance as compared to the Nifty. Remember, a lot of markets are closed today, but nonetheless, it's been a tad bit of an outperformance that the Nifty's done, or rather you can say resilient as compared to a couple of global markets. Prashant had pointed out Aarti Drugs, that stock really continues to zoom ahead. So 15% higher currently for that stock. And in fact, it is up 22% for the week as well. Ashwini Gujral is here to talk about the charts as well as to talk about a couple of his picks. Ashwini, hi, over to you. Before we start talking about the Nifty, what about a lot of these stocks which are showing double-digit gains? Aarti Drugs, RPG Life, all of them up anywhere between 10 to 15 odd percent. Are you convinced?
I don't think convincing me matters a whole lot. I've been saying that these stocks have bottomed out, and now the rally is spreading to even the smaller pharma stocks. This looks like the real thing, and people who think stocks have run up too much will be surprised, because the first move is often happens in this manner. But I think an even bigger move will happen if these stocks correct 3 to 5 sessions. Overall, Nifty remains sideways, although today looks a bit better than yesterday, and maybe we have a rally towards the close. Now, along with pharma, I think metals are now moving up. So Tata Steel looks like it's making some sort of a bottom and could rally into the close. Also, Infosys is, I think, now 20 bucks away from a new high, and since techs are having a good time, I think this should move higher. Today several large stocks are doing well. RIL, Infosys, a lot of the metal stocks are coming back. So that way the market today looks like it has a lot of support. Even on the banks, HDFC is now begun to move higher. So that way, I think with a stop, say around yesterday's low, Nifty, Bank Nifty should be bought into. For the moment, Raymond is a buy with a stop of 1,000, target of 1,035. Venki is a buy with a stop of 25.50, target of 27.50. And Ajanta Pharma is a buy with a stop of 11.70, target of 12.20.
Ashwini, thanks very much for that. Appreciate you joining in with that commentary. Ashwini will be back with us at 12:30. Okay, we're going to sort of take a very quick break here. We come back and we'll focus on market fundamentals. Rahul Arora of Nirmal Bang Institutional Equities joins in with a couple more ideas. Back in two.